What's going on, everybody? Thank you so much for checking in. This is Q from Hyperstocks, and today we're going to talk about some levels that you need to focus on for the week ahead. We're going to talk about levels for SPY, which is the S&P 500 ETF, and we're also going to go over our watch list, which includes names like Tesla, Apple, Google, Meta, and Amazon. So lots of big stocks, big tech names that we are watching for the week ahead. Now let's go ahead and get started by talking about SPY, and we're going to do so on daily candles, where we're going to point out that last week buyers did an excellent job at keeping us above the 10 and 20-day moving averages. So when SPY rallied from March into April, you can see that it was trading above this blue and purple line the entire time of that rally, and buyers did an amazing job last week of bringing us back above it every time that the sellers tried to take us below it. So remember, what's happening on the market every day is a battle between the buyers and the sellers to get to their direction. The last week or 2 weeks, we have generally been trading in the same range because they are battling it out. But we can see that we are trading at the top of our recent rally, which is a good sign on the buying side. And the fact that we have recovered above our important moving averages every time we've broken below them, that is a good sign, and it could indicate that we are ready to push higher. But before we could push higher, we have to break out of this range. We can see that the bottom of this range is all the way around 403 and the top of it is at around 417.70. So this is our overall range to focus on, but within that range there is even a smaller range to focus on, and this is where we move from our daily candles to our micro chart candles, which here we're focused on the 30-minute candles. So the overall range is between 403 to 418 or so, but you can see that there are support and resistance points within that range. Now at the support of 408.85, we can see that the market has bounced 3 times. So 1 time, 2 time, and 3 time, which we call that a triple bottom pattern. So triple bottoms are usually where a stock bounces at the same level and then reverses to push higher. And you can see that this is what's potentially happening, with last week forming that third bottom, which makes 408.85 a significant support, which is why if we break below it, we can potentially take on a put or a short position down to 407. And if we break below 407, then we will likely force a fall towards 403 and 404. Now, what makes 408.85 such a strong support? It's the fact that we bounced at it 3 times. So remember, 3 times the buyers said, no, we will not take it below this level. So if they finally do, the sellers will take over and they will break us lower. Now to the top side, before we can move to 418.30, we have a resistance at 414.91. We will need to break above that level to move towards 416, and if we move above 416.10, then our price target is going to be 418.30. Now, ultimately speaking, we want to break above 418.30, not because this was the most recent high. This was because this was our high in February before we started selling off for the next month. So if we can meet our high in February, which is 418.30 at this level, and break above it, then the market will likely see what we call a short squeeze rally, and we will likely move towards our price target of 425 to 430. You can see that the pattern for the last year has been making higher highs, and so if we do break above 418.30, the next highs projection is going to be towards the 430 range. So don't be surprised, regardless of all the recession talks and all the fears around Wall Street, if we do end up pushing higher, because earnings season just came out and earnings are looking good so far from the tech side, which holds most of the weight in the market. Speaking of earnings, this week's attention shifts to retail data and earnings from companies like Home Depot, Target, and Walmart. So big retailers, big box retailers are going to be reporting earnings this week, and this usually gives investors a way to gauge the health of the economy because retail earnings are directly tied to consumer spending. Last week, we saw a report come out, and it was the Consumer Sentiment Index, and we can see that it dropped to a 6-month low. So this can kind of foreshadow what retail data or retail earnings are going to look like this quarter. Big box retailers like Walmart and Target may not be as affected because they do sell household goods that are necessary, but you can start seeing the weakness probably in companies that are more specialized like Macy's and Nordstrom. You may see a drop off in their earnings there. So now let's move on to our watch list, which we're going to start with Amazon here, and we're going to highlight or point out that although this is a weekly watch list, sometimes the levels will take longer than a week to be reached or to be broken out of. The last few weeks on the market, we have seen things just kind of consolidate and move sideways on some names, but usually the longer a stock consolidates, the bigger the breakout is, and Google is a prime example. You can see that we have been watching Google for weeks now if you've been keeping up with our videos, and it has not broken out of this range, and it finally did. And you can see that within that breakout, the stock gained more than 10% just by breaking out of this long consolidation. Now, let's go ahead and get started with Amazon, and let's talk about it on the daily candles, and then we'll move on to the micro picture and give you some levels. Amazon on the daily candles, you can see is trading back above all of its healthy moving averages. This includes the 10, 20, 50, 100, and 200-day moving averages. This is the first time it has done so since it started crashing back down since August of 2022. So this is a very big accomplishment, and it does mean a lot that this is happening right after an earnings. So investors are taking a brighter look at Amazon, and it could signal a continuation in the coming weeks and in the coming months. So let's talk about Amazon, and we're going to do so on the 30-minute candles here. Our first breakout point on Amazon is going to be 113.30. So we want the stock to move above that point in order for us to move to a price target of around 116 to 117. Now, if you haven't seen our videos before, what we usually do is if we enter a stock above a resistance, we will move our stop loss to just below that point in the case that the stock fails back down and we need to cut losses. But if the stock does hold above 113.30, then we plan on holding it towards 117 and then to a second price target of around 119 to 120. Now, this is a pretty audacious price target. It may not happen this week, but if we go on a full-on market rally, then it could very much happen. However, if you are trading options, then it is very recommended that you take at least 2 to 3 weeks minimum till expiration. That way you give yourself enough time for the stock to move up, consolidate, move up, consolidate, and finally reach that price target. Now, just like we plan on a stock going up, we can also plan on it coming down. It's very important to realize that you never know what the market is going to do, and you can't force your will on it, and you can't impose what you want to do on it. You just have to trade the level that it gives you. And if the market decides that this is going to be a down week and we move below 106, then we will take a put or a short position on Amazon, and we will take it down to a price target of around 101 to 102. Now, we are leaning more bullish, as we explained why in the SPY analysis. However, in the case that the market goes down because of whatever reason, we do have a plan to attack the downside too. Now, moving on to the next stock, it's going to be Meta. Meta has been more on the quiet side. You can see that Meta, since not this last earnings, their previous earnings, the stock has been on a monster rally. So we're not too surprised that after another strong earnings, the stock is still moving sideways. It had a very strong gap up, but the stock needs to cool down, and buyers need to build more confidence before they take it even higher. Meta is trading at a 52-week high after the last earnings jump, and so it is likely getting ready to move higher, but it needs that time to consolidate. We have created some levels to focus on now that it's consolidated for quite some time. We want Meta to move above the 245 level in order for us to take a call or a long position towards a price target of around 250 to 253. If Meta fails and it moves below 229.70, then we will take a short or a put position towards a price target of around 222 to 224. The reason why we have those levels is pretty obvious. This is the low of Meta's consolidation range, right around 229, and this is the high, right around 245. So it's pretty obvious if we move below the lows, then we will start filling this gap down, and if we move above the highs, then we will start moving towards our next price target, which was generated from a resistance point about 2 years ago. Now, the next stock on our watch list is Google. We are already in and out of Google because we have been watching it for weeks now. So we actually got into Google as a group at 105 to 107, and we ended up exiting last week right around 117 to 120. However, the fact that Google held so well throughout the entire week, so the market pulled back, but Google continued to hold those highs. That is a great sign, and it could mean that the stock is ready to push higher. In fact, Google is reminding us a lot of Nvidia when it broke out and it rallied for months. So this is definitely a stock to watch, and here are some levels that we are focused on. So Google here needs to break above 118.05 in order for it to continue moving up towards 120 to 122. If the stock moves below 116, it is still not in a bearish territory. Even if it moves below 114, it's still not bearish. But if it moves below 110, then we can potentially consider taking on puts or a short position for the stock. But as long as it's trading above 110, we are bullish on the stock. We have given ourselves a very long timeline on our next play, and we are likely going to continue holding shares. That way we can capitalize on the upside move. Google is definitely a big one to watch. Next stock on our watch list is going to be Apple. Apple, just like Meta, has been rallying since their last earnings, so it is not surprising at all that the stock is consolidating. And we want to note something here about the market and the way money turns in the market. So you can see that while Apple and Meta are consolidating sideways, these are the stocks that have been taking most of investors' money the last quarter. Google is finally starting to get that money flowing into it. So let's go ahead and look at Google, and you can see that while Google was consolidating sideways, Apple and Meta were moving higher. And now that Meta and Apple need to cool down, Google starts to get some of that money from investors, and it will move higher as those stocks cool down. Now, Apple still has a very strong of moving up. The stock is trading above its 10 and 20-day moving averages, and these are what its levels to focus on are. First, we need the stock to move above 174.60, which is a pretty obvious resistance. This is the resistance that it got rejected at last week before it moved down. In order for it to move to the highest point it has reached in the last 52 weeks, which was 176.15. That's about the only price target we have on Apple, because we do see that the stock is ready for a potential strong pullback. So we won't be holding the stock much higher than 176.15, but it also depends on what breakout volume looks like at the time. Now, if Apple fails and it moves below 167, then it can potentially move to a price target of around 164 to 165 to the downside. Last but not least, the moment we've all been waiting for, let's take a look at Tesla. Now, Tesla moved up last week and then it moved down, so it just threw people all over the place, and it was a very uncomfortable situation to be in because Tesla moved up based on the news that Elon Musk was stepping down as Twitter CEO. So investors were happy that finally Elon can focus on Tesla. But then the very next day, Tesla goes on to recall every car it ever made in China, which obviously is terrible news for the stock. And we can see that all the buying and that gap up that it had on Friday got sold back down, and it closed below Thursday's lows, or near Thursday's lows, with very strong selling volume. So let's talk about Tesla. Let's try to alleviate some nerves. And calm your nerves down and talk about some levels, because when you don't have levels, that's when you get nervous. But when you have levels and a strategy, then that's when you usually take more comfort in the market. So Tesla, you can see, has been making lower lows, unfortunately for buyers. We have a high here, we have a high here, and we have a high here. So this is a lower high, and lower lows. And so looking at Tesla's daily candles, it's not looking so good. Buyers have been trying very hard to get it back above this 50-day moving average, but it has failed to do so. But every week is a new week on the market, and let's talk about what could potentially happen and at what levels it could happen. So first of all, Tesla needs to break above 177.40 in order for it to move to a price target around 182.15. If Tesla moves to 182.15, it will be back above the 50-day moving average, and it will be back above 180, which is a psychological resistance for investors. And so if Tesla moves above that level, then it can potentially rally towards 185 to 187. And remember, when Tesla rallies, it goes on for quite a while. So if it finally gets that move, then it can potentially push much higher. But for now, we're sticking to the price target of around 182 and second price target of around 187. Now, if Tesla continues to make lower highs and lower lows, then it can potentially fall below 165. If it falls below 165, then it can fall towards 162. And the second price target to the bottom is 159. Now, 159 is not the most critical support. It is a very critical support because you can see that when Tesla was consolidating after earnings, it held 159 for 1, 2, 3, 4, and 5 days before moving higher. So if buyers decide to give up that 159 support and sellers take over, then Tesla will likely stop at least 152, but it will move down towards 146. This is probably not going to happen just this week. If it does happen, keep in mind this is on a longer timeline. For this week, these are the only resistance and support points that we're focused on. So I hope you guys found this video helpful. Please like and subscribe, and see you guys next week.